Hi, Davin Sundvik here, talking about cash flow, specifically passive income in real estate. Now, a lot of times your first year owning real estate is your worst year, but I'm going to show you 3 ways that you can make passive income in real estate to overcome that fear of home ownership or real estate investing. Now, in case you don't know, this is a part of a 5-part series talking about the 5 ways to make money in real estate. We have another video going more into depth of each of the 5 categories, but let's just go into just what they are. It's passive income, appreciation, tax benefits, massive income, and leverage. So without any further ado, let's get right into the first way to make passive income in real estate, and that is rental income. Now, this actually applies to homeowners too, not just investors. Investors. For homeowners, we call this opportunity cost. It's the cost that we would have paid in rent and moving expenses anyway, whether or not we're a homeowner or a renter, right? So everybody's got to pay for housing. It's a cost of doing business wherever you live. You got to pay for real estate. So at the end of the day, that is an opportunity cost. Now, depending on your loan program, that opportunity cost might be greater or less than your current cost for housing. Let me explain. Let's just say you could rent a home for $24,000 a year, but you decide to purchase that same home and it costs you $22,000 a year with all your expenses. That is a $2,000 gain every single year. And because you're saving money by spending less money, it'll make you feel like you got a raise. And that is essentially a form of passive income. But the same is true if there's negative income, right? Meaning if you spend $26,000 to maintain that home every single year instead of $24,000, you might think in your mind, man, I bought real estate at the wrong time, so I lost $2,000. Well, it's not necessarily true, because you'll make it up in the long run with these other 2 forms of passive income, which is why you got to buy and hold real estate for a long period of time. Okay, the next thing we're going to talk about is loans. Now, technically, it exists in our leverage category, and we'll talk about that later on in the video, but briefly, I do want to go into the 3 ways that loans affect passive income and cash flow. Okay, when we take a cash out refinance, it affects cash flow because essentially we have extra cash that we did not earn at our jobs that we can go and spend. Don't recommend this, but it is available. The next thing we can do is just a standard refinance. There's a bunch of reasons why we would do this, and that is to lower our monthly payment. Essentially, it increases that gap, right? So if we bought on a 7% interest rate and now market interest rates have dropped down to 4%, we can save quite a bit of money on our mortgage just by lowering our interest rate. And maybe we were paying $26,000 a year for that $24,000 rental, and now our monthly payment has dropped to $21,000 a year, right? We wouldn't have had that opportunity to lower our mortgage payment if we were not a homeowner, right? And meanwhile, that all that time that's been going on, that renter probably is not paying $24,000 a year anymore. They're probably going to be paying more money over time because of inflation. We'll cover that in just a minute here. All right, the last way and third way that we make money off loans is by paying them off through amortization or just paying them off early, right? Once you pay off your loan, that's a very obvious way to increase that gap of your cash flow, whether you're an investor or you're comparing your now very low housing expenses compared to the cost of rent. Paying off your loan is a very good way to essentially increase your cash flow or your available spending allowance that you have in order to do whatever you want to do with your money. All right, I told you I'd talk about inflation, and technically it is a benefit of owning real estate. And now a lot of people don't think of inflation with benefits, but let me just kind of think through this. If inflation is going to affect us, would you rather it affect us more or affects us less? I would much rather experience less inflation than more inflation. So let me show you why homeowners experience less inflation through just a little bit of basic math. Let's say you're 25 years old, making $50,000 a year. That sounds great. And you think, hey, in 30 years, when I'm 55 years old, I think I'll be making about $150,000 a year. That's great, but on average, inflation's probably going to eat up all of that $100,000 increase in your salary, right? Because you got a $100,000 difference between 50,000 and 150,000, right? So at the end of the day, it's all going to get eaten up by inflation. Homeowners are protected on their housing portion of inflation. See, that tenant is going to have to keep paying inflation as their landlord raises rates every single year to match with inflation. Well, that homeowner has the same monthly mortgage payment the entire time, even if they didn't refinance. But if they refinance, that makes this even more extreme. But let's say they didn't even refinance, right? Well, as time goes on, that gap is going to increase and increase. And let's just say, for the sake of making numbers easy, that it's 30%, right? And that increase is 30%. So that person that was paying $24,000 a year is now paying an extra $30,000, because we said that of that salary increase, 30% of it was for housing increases. So now they're paying $54,000 a year in rent. And if you think $54,000 a year in rent is insane, I dare you to watch this video in 30 years and tell me that I'm crazy. So with that being said, I think you can see very quickly how the benefits of owning real estate don't really exist tomorrow. They don't exist next year. They really exist in terms of 5, 10, 20, and 30 years. So if you're thinking about buying real estate, make sure you're in a stable position in life. And if you've got any questions, comment down below. And if you want to see how these projections work on a calculator, on a real live calculator that actually shows you what inflation looks like and how all of these cash flow metrics mesh all together as one unit, then you gotta subscribe, because we're gonna make that video at the end of this series. Thank you for watching. Have a great day.